Hello, I'm Bernard Hickey from Interest.co.nz and welcome to a special economic weather report brought to you in association with Bank of New Zealand. Today we look at figures from the Reserve Bank of New Zealand's Inflation Expectation Survey. This is done every month or so and looks at what business managers are saying about their own inflation expectations. Remember, the Reserve Bank has to keep inflation over the medium term between 1 and 3%. And this latest survey shows that inflation expectations from business managers have dropped from 3% over the next 2 years to 2.9%. Now that remains within just the medium-term target for the Reserve Bank's inflation outlook. Now that partly is because of the high New Zealand dollar. Remember, the high New Zealand dollar means imports are cheaper, and also a fall in the oil price. And of course, over the last 3 to 4 weeks, we've seen some real concerns about global growth. Slower global growth, in theory, means less inflationary pressures. Also, inflation expectations for just the next year, rather than the 2 years, have dropped to 2.9% from 3.1%. Now, this is even though headline inflation is currently running at about 5.3%, in part because of the GST increase last year. Now, this slight easing of the inflation expectation view will be of some comfort to the Reserve Bank. However, it's not enough to change economists' views about when the official cash rate will move. You might remember 3 or 4 weeks ago the banks changed their view from an interest rate increase on September the 15th and they pushed it out to an interest rate increase on December the 8th. Most people are expecting an increase of either 25 basis points or 50 basis points on December the 8th, so rates on hold until then. And then the official cash rate will rise from 2.5% now to maybe 4%, in some cases people are saying 6% over the next couple of years. That would increase floating mortgage rates from just under 6% now to around 7%, maybe 8%, depending on how high the official cash rate rises. That will depend on a couple of things. What's happening globally with growth? Remember, if we have very strong growth around the world, that will push up inflationary expectations and push up the outlook for the official cash rate. If it's slow, we're not going to see such a big increase in the official cash rate. The other thing to watch is how quickly the rebuild happens in Christchurch and what that does to construction prices. I'm Bernard Hickey. That was a special economic weather report brought to you in association with Bank of New Zealand.